Hey everyone, and thanks for jumping back into the cryptoverse. This is a premium only video. In this video, it's going to be a long one. We're going to be doing a recap. We're going to look at the Bitcoin dominance. We're going to be looking at the risk metrics and how to use those. So we're going to cover a lot of stuff in the video. I figured we just need a general recap of everything going on in the market. The markets are crazy. A lot of videos we like to do some specific quantitative analysis on something, but with the markets as crazy as they are now, I think, we have our tools. Let's use them. Okay. At this point, we'll develop more tools after things calm down. But we have our tools now. We've been developing them for a long time. Let's use them and navigate what's going on in this crazy environment in cryptocurrency. So let's go ahead and jump in. So this first chart shows the Bitcoin dominance versus time. And the last time I showed this chart, it was before we had started coming down. We were in fact moving up to the top of the channel. And it's color-coded by whether Bitcoin's above its 20-week or below it, and whether it's above its prior all-time high or below it. And you can see that around this time last time, once Bitcoin got above its prior all-time high, it led to a pretty rapid depreciation in the Bitcoin dominance. This time, it did not happen immediately, but a few weeks later. Now, this goes back to the old saying that we've always said, alts are dead until they're not. And you get into these phases where Bitcoin goes on these amazing runs, or Bitcoin is capitulating and altcoins are capitulating harder. And so you get into these scenarios where the dominance of Bitcoin is going up, and a lot of the general narrative will be that, okay, well, alts are dead. Why does anyone buy altcoins? And then you get reminded during times like this why people like buying altcoins. It's because the theoretical returns are a lot higher, but you're paying for that with a lot of extra units of risk. And so what happens is a lot of new people join now. They look at Bitcoin, and maybe this is one of you guys. You join crypto for the first time. You look at Bitcoin, you're like, well, Bitcoin's not doing anything. Why would I invest in that? So then you throw all your money in altcoins. And at first, it's like you're a genius because everything you throw money at, it continues to go up in price. And it can do that for longer than you might otherwise think. And then at some point, you just keep throwing money and money and money into altcoins until you wake up one morning and your portfolio is down 50%. And it doesn't recover in the short term, and then Bitcoin dominance goes back up. So not only does your altcoin valuation against USD bleed, but it also bleeds against Bitcoin. And then what happens is that, during those those times filled with turmoil for Bitcoin, people continue to trade back to Bitcoin because they get so disenfranchised with the altcoin bags that they bought when the market was going crazy that they end up capitulating back to Bitcoin. And then this spurs the next Bitcoin bubble because everyone goes back to Bitcoin. You ride the Bitcoin wave. And then, whenever Bitcoin calms down, then altcoins can start flying again. It brings in the new money that look at Bitcoin and like, why the hell would you invest in Bitcoin? It's not doing anything. FOMO back into alts. Then the people who had, bought the alts when they were lower valued can then sell at a much higher value back to the new people that are joining. And the cycle just repeats and repeats and repeats. So right now, you can see the dominance has come down significantly. We've been to the bottom of this channel many times, so let's not assume that we have to go below it yet. We might. This could be the time where we go below it and we go into a major alt bubble against Bitcoin. So far, I would not consider this to be an altcoin bubble against Bitcoin. I would just consider this to be a shorter term speculative bubble of the altcoin market. It's not nearly as appreciated right now as it theoretically could be during the final blow off top for the mania phase, which might not even be part of this bubble that we're seeing here. This could just be a smaller bubble that ultimately takes us to a much bigger bubble later on. We're not even out of this downtrend channel yet, which we've been following for a long time. And in order for us to get below it, we would need to see the Bitcoin dominance drop below 55%. So we still have, another 6% at least to go before we would see the altcoin dominance come out of this area. So the Bitcoin dominance to come out of this area, meaning the altcoin dominance would be going up. We still have a ways to go, and we need to be somewhat pragmatic about things. If the dominance of Bitcoin drops another 5 or 6%, it's going to imply that altcoins are just going even more crazy than they are now. Another several weeks of what's going on right now, the dominance is going to be dropping like a rock. Okay? If that happens, do not fall for the mindset that it has to go on forever. It might not stop here, but in the same manner, eventually the dominance will come back up, and then that's when you do not want too much exposure to altcoins, okay? We accumulated the altcoins when it made sense to accumulate. The markets are going crazy. Let the new money come in, prop the markets up. We'll take advantage of that. Either you go back to USD or you go back to Bitcoin, depending on what you think the market's going to do. If you would rather go back to Bitcoin to protect the amount of Bitcoin you have, if the price of Bitcoin continues going higher in the short term, you could do that. Or if you say, you know what, this market is too hot for me, I'd rather just get out. You know, I got a mortgage to pay, I got bills to pay, and this is basically going to cover my mortgage, or this is going to cover my car payment or my student loans. Mark Cuban put out this tweet the other day, and I think it's a good tweet. He said, bills do not care about the markets, right? So if you find yourself in a unique position where you have life-changing money, and you can go to your spouse or your significant other, or maybe you're young and single, or whatever, right? Whatever it is, whatever your own situation is, if you can change your life for the better, and you get the opportunity to do that, I just don't want to see you waste that opportunity. So this shows you where we are. We're not even in final bubble territory for the altcoin market, and it might not be here for a while, right? This might not be. We have to consider again that this might not be the altcoin bubble that takes us all the way down here. It's always a possibility that it's not. Let's consider that. Not something to take to the bank. It's not financial advice, but let's just consider it as a possibility. You can see the altcoin move here, a general uptrend, bubble, back to the mean, general uptrend, right? We're still just in a general uptrend. We are not necessarily in any type of major altcoin dominance bubble. We are in a bubble in terms of the overall risk of the cryptocurrency asset class, but as you measure the altcoin dominance against the Bitcoin dominance, we're not really necessarily in a bubble. We're at least in maybe a micro bubble, right? Like we have a lot of them in the past, but we're not in one of these things yet where things are going up like beyond what you could imagine. And again, that might not happen. It might not happen in the next few weeks. We might stop here. If we go below, you gotta be ready for that, because that in and of itself is a serious time, right? A serious time. The reason I think that we're still relatively early on in the market cycle, as you guys have seen this chart, we still have a ways to go to get up. If we come up to these levels, we still the entire cryptocurrency asset class needs to trend up by several $1 trillion. And I look at this and I say, we're still close to the fair value line, relatively speaking. We're about 100% overvalued at the current time. But we've been well above that before. I don't anticipate us making it to the green line. You can see that this one was well over the green line. This one was just barely over the green line. And then this one hit the green line. The next one will probably come just shy of the green line. And so we need to consider that. But we're still nowhere near it right now. So this could be leading into it, right? It could be leading into it, or it could just be one of these bunny hills that takes us on much longer before we ultimately trend up. Let's just stick to the risk levels. If you look at the extension from the fair value and looking at the green line here, you can see that it does trend down over time. Okay? We're still all the way down here. We still have a ways to go, theoretically speaking, for the entire cryptocurrency market cycle. Now, the short-term bubble, as we said, that could come to an end in a few weeks, tomorrow, next month. But in terms of the entire market cycle, I don't feel like there's evidence to say yet that we're anywhere close to the market cycle top before we usher in, a pretty brutal bear market. Maybe we have some short seasonal winters, but I don't think we're headed yet to a winter that's going to last us for 2 years or anything like we just experienced over the last market cycle. This shows the risk of the entire cryptocurrency asset class. You can see it's getting somewhat heated. Personally, I don't put any money into crypto if the risk is above 0.7. There's several times where it can go above 0.7 and then ultimately trend back down below it, giving you the opportunity to get back in. It happened here and here. Right now, the market's too heated for me, right? So no money for me is going into crypto. I'm super happy with my positions, letting them ride. I feel like I have a huge advantage on a lot of the new money entering the market because you can easily stomach 20 or 30% drops and not blink an eye, not bat an eye at that. If you switch it over to this chart where you put the risk on the secondary y-axis, and you say if you follow along with me and you don't put money into crypto above 0.7 risk, we're currently approaching 0.8. So for me, we're well out of the time frame for putting money into crypto, and this region up here is more or less just profit mania, right? You know, you feel euphoric when it goes up. Imagine the feeling of having taken profits during a manic bubble and then watching the valuations go down. That's another type of euphoria that a lot of people haven't felt before, because you felt like you got away with something. You're like, wow, did that really just happen? Did I really just buy Ethereum at $100 and $200 and then sell it for several $1,000s and then watch it come back down so I can accumulate? Did that happen? That's another feeling of euphoria that can happen. This shows the number of days we spend in each risk band. You have to note that we spend, you know, maybe we've in our entire history over the last 11 years, we've only spent, you know, less than 100 days in the 0.8 to 0.9 risk band, and you know, not even 40 days or so in the 0.9 to 1 risk band. Here it breaks it down by percentage of time. So we do not spend a lot of time in these upper risk bands. They can last for weeks and months, but I sincerely doubt that they're going to go on for, say, you know, 8 months or anything like that in these upper risk bands. So that's just something to keep in mind. Now, if you look at the BLX, you know, we're currently at around 37,000. If you look at the daily price, we're at 37,600 or so. So one of the things we need to keep in mind is that a lot of our analysis, as it relates to, say, things like, you know, a market cycle peak or a short-term bubble peak, what can we expect things like Ethereum to do? You know, we've discussed the implications of Ethereum going to $3,000 up here at the top of the next regression band, what that would look like for the Ether Bitcoin valuation. If we pull up the Ether Bitcoin valuation, I believe I had it up here. It looks like I do not have it up here anymore. So let's pull up the Ether Bitcoin valuation. So one of the things we've talked about is a lot of the symmetry that we've seen, you know, a double bottom here, this top, and then breaking below, this bottom here, and then, you know, coming up to the top just like we did over here. You know, we're in the region where it's theoretically clear skies ahead if Bitcoin is able to hold steady. Obviously, the way that Ethereum makes it up to this valuation against Bitcoin is if Bitcoin holds steady. If Bitcoin puts in a new all-time high, okay, if it puts in a new all-time high, then this analysis will break down in terms of any immediate moves. And my guess is that if Ethereum, or that if Bitcoin did go above 42K and re-enter price discovery mode, then the Ethereum Bitcoin valuation might come back down. Okay, so that's a possibility that you need to consider. But if Bitcoin is able to hold these levels for a while, then I don't think there's anything prohibiting Ethereum's valuation to continue to skyrocket outside of this uptrend channel that we've drawn, just like it went below it in December. It might come back up to this level if it came up to a valuation of like 0.085, which it seems somewhat ridiculous. If it did, that's about a $3,100 Bitcoin at the current price of Bitcoin, or a $3,100 Ethereum at the current Bitcoin valuation. Keep that in mind. If this happens, a lot of red flags should probably be going off in your head. Not to say that it can't go higher, but in the same way that we DCA'd from Bitcoin into Ethereum over here and DCA'd into USD into Ethereum in this region, you know, you have to consider that doing it back the reverse way is also likely going to work out, because this will not trend up forever, right? It will not trend up forever, but we want to take advantage of it for as long as we can. Now, before I continue looking at the charts, we need to look at the risk dashboard, because there's a lot of new people here, and I need to explain what's going on. The way this works is for Bitcoin, Ethereum, and Link, I buy them when their risks are below 0.5. If you're new to the channel, you might be like, well, nothing's below 0.5 here. That's the point, right? The market is too hot for me right now to be going into what's going on, or you know, continuing to DCA into the market. It's too hot for me to go in. But if we see these below 0.5 again, you can bet I'm coming back into the market. The Ethereum Bitcoin valuation risk is at 0.589. Historically speaking, we have not been much above 0.6 since 2017. So if you decided back in December to go essentially all in on Ethereum from Bitcoin, then you're doing quite well, and you might be thinking, well, when should I convert back? I would say, if you look at these Ethereum Bitcoin valuation levels, zero point 0.6 might be the first kind of step, right? And it might be like 1/10, depending on what strategy you want to follow. So you have to consider, how aggressive you want to be. If you want to go back to Bitcoin, if you want to go back to USD, then I would say just stick to the USD risk metric. If you don't want to go back to USD or fiat, you can stick to, say, the Bitcoin risk metric, and then you just trade back and forth between Bitcoin and Ethereum. Therefore, if Ethereum goes to 0.6 risk against Bitcoin, maybe you trade a little bit of Ethereum back to Bitcoin. If it goes to 0.7, you sell even more back to Bitcoin. 0.8, even more. 0.9, getting pretty hot. If you go to the Ether chart, the risk chart, you can see the Ether Bitcoin risk. What would it need to get to reach 0.9? Well, to reach 0.9 risk, I mean, you can see all the way at 1, it would need to go to 0.159. That's probably not happening anytime soon. But to get to, let's say to get to 0.8 risk, it would need to go to 0.093. 0.093, if we go back to the Ether Bitcoin chart, is all the way up here. It's all the way up here. So if we find ourselves at that level, I would just remind you that that will not last forever, right? It simply will not last forever, and that's something that you need to keep in mind, right? Keep that in mind. It will not last forever. If it doesn't come back up here, and we ultimately just maybe come up a little bit and then trend back down, and if you wanted to convert some of that Ether back to Bitcoin, then doing it at, say, the 0.6 risk level would be at least you got something back to it, right? At least you were able to get something back, even if it wasn't necessarily the entire thing. But again, this comes from the perspective of having a majority of my position in Bitcoin, right? If the majority of my position were in Ethereum, I would be more aggressive of going back to Bitcoin if my strategy was to go to get my Bitcoin stack back, because I let's say I didn't follow the risk metric and I decided to just completely get out of Bitcoin. And I only had Ethereum, then I would be using these types of moves to convert back to Bitcoin just so I have my Bitcoin stack. Because I've said before, it's too risky, in my opinion, not to hold Bitcoin. Even at these levels, it's too risky not to hold in terms of the grand scheme of the market cycle. So if you don't have any Bitcoin, then I would suggest, and it's not financial advice, but what I would do in that scenario is I would use these moves, buy Ethereum and buy these altcoins to get back to a admirable Bitcoin stack. That is what I would do. If I didn't have any Bitcoin, if I completely took all my Bitcoin and converted it to Ethereum in December in lieu of the anticipated Ethereum Bitcoin rally, then I would be much more aggressive in getting back my Bitcoin. Because I still have a lot of my Bitcoin, I'm not going to be as aggressive. You guys know I'm fairly risk averse when it comes to getting rid of my Bitcoin. I like it to be the majority of my portfolio. I don't want to see it come down to some low percentage of my portfolio. So with that in mind, we need to stay pragmatic about things. Now, one of the things I would say is for ADA, I only accumulate it below 0.4. So we're well a ways from that as well. You might say, well, ADA is at 0.56. I accumulate ADA below 0.4. These coins, I'm not accumulating Monero. I haven't accumulated Monero in a long time. It's basically just a stack that I've had for a while. XLM, VeChain are some coins I bought maybe 6 weeks ago or so. I'd have to check the Telegram alerts channel or the trade for it. Or you guys can check the alerts channel to see where it happened. But I believe it was maybe 5 or 6 weeks ago when I accumulated these. I do have some Celsius. I'm certainly not buying right now. Uni, I have a lot of it, as I mentioned. Comp, you guys know that Uni and Comp, my main DeFi exposure, other than some of the main ones. These are the main ones. Avalanche, I've mentioned it the last couple weeks. It was about $11 and $12 the last couple weeks. Now it's at $17. Not that that's that impressive, right? I mean, the entire market's trending up. So let's not schedule our Forbes interview on that one quite yet. So what I want to do here is I want to go over to CoinMarketCap, and I want to show you, so far DOT, ADA, and Link still have the 4, 5, and 6 positions because we're not including stablecoins. So they still have the 4, 5, and 6 positions. It's possible that they're able to flip XRP. You guys know that I would like to see them flip XRP, but we're not quite there yet. We still have to wait on that. We're not quite there yet. Uniswap, again, a phenomenal performer. I'm glad I picked it up. I know you guys are very pro Aave, I think it's how it's pronounced. I'm not super familiar with this one, to be completely honest. And it's easy to look at things and say, oh, you feel like you missed the boat on one. But I feel like we did a fairly good job, right? I mean, looking at ADA below 2 cents, getting Link when it was $1 to $2, and even reaccumulating at $8 to $9. Uni, we were getting it at $3. Dot, we were getting it at $3 to $6. All of these are up really a lot right now. Obviously, Aave would have been nice too. Congratulations to those who hold it. I'm not going to FOMO in though, right? I'm not going to do that. What I will say is when a correction does come to the market, we'll add this one. Okay, we'll add it. We'll likely add it. I don't want to say definitively yet. We'll probably add it to the dashboard and follow along. And I'll probably pick up some myself whenever the risk levels come back down. But I'm not going to chase, right? I'm not going to chase. I'm happy with my positions that I have. So if we go look at Avalanche, this is one I'm hoping to see move up the ranks. I mean, I've been over a lot of these coins before. Maker, I said a few weeks ago, this is one that I think will do well. I said Compound, I own this one. I think that one will do well. Cosmos, I think is a good one. VeChain is I think it's a decent one as well. But yeah, I mean, we'll keep an eye on the top coins here. But let's go back to the risk dashboard. And what I want to do is remind you how you use this, okay? So if you want to buy a coin, you typically look for, you want the USD risk to be low if you're buying it with USD. However, if you wanted to buy it with, say, a crypto, you want to buy it with the lowest level, right? So if you wanted to buy ADA, then buying it with Ethereum would actually be less risky than buying it with USD. Because if you're buying it with USD, when it's already very propped up against USD, there's a good chance you lose valuation in USD. But by buying it with Ethereum, Ethereum's also highly overvalued as well. So, and we could argue whether it's overvalued or not, but I'm saying in terms of, say, extensions from the 20-week moving average and all that nonsense, then converting, say, some Ethereum to ADA would be less risky than converting USD to ADA at this point. It's not always like that. If you go back and watch videos like 5 months ago, a lot of these were reversed, right? Maybe the Ethereum Bitcoin USD risk levels were higher than the USD risk levels. So it fluctuates with time. Like if you were wanting to buy Link, the least risky way to buy Link would be to do it with Ethereum, because Ethereum has gone on this major move recently. So by selling some of it to, say, something like Link that hasn't performed quite as well as it theoretically could, I mean, although Link has done phenomenally well, converting Ethereum to Link would make more sense than converting USD to Link in terms of a risk management point of view. But because momentum is really powerful, obviously converting, if you wanted to buy Link, then converting USD to Link at this level could theoretically yield you a nice short-term return. However, that's just a altcoin casino at that point, and that is not the purpose of this channel, right? We establish the positions when the risk levels are low, then we let them ride for a while, and then we take the profits when the risk levels go up. We wait until things come back down, and then you just come back into the market. It's all about percentage moves and all that. So I hope that makes sense. But when you sell it, it's the reverse. So like if you were to sell a coin, you want to sell it to the highest risk. Because if Ether USD risk is 0.66, then USD Ether risk is 0.34. So if you want to sell Ether, you say, well, what should I sell it to? Should I sell it to USD or Bitcoin? What I would do is I would look at this and say, well, I want to sell it to the one that's higher. It's USD. Also, the total crypto market cap risk is well above 0.7, so I'm not really that interested in continuing to accumulate a lot of crypto at this time. For instance, if you wanted to sell Link, you'd say, well, what do you sell it to? Ethereum? Well, Ethereum's already fairly extended. Bitcoin is too. But USD, going to USD, this would be the time where it would make a little bit more sense. Obviously, these risk levels could go up several more risk bands. We could just be at the beginning of a nice final surge of the altcoin market before things cool down for a while. So you have to consider that these can go up for a while, and it's all about a systematic strategy as you navigate the entire bubble, not just continuing to FOMO in and out of whatever coin is pumping that day. You can see that 1 Bitcoin now equals only 22 Ethereum. So that's come down a lot. This was 40 not that long ago. And Bitcoin is extended above its 20-week moving average by about 81%. If we go look at Bitcoin USD, we covered this a while ago. Obviously, we don't know if it's going to be the same thing like it did for Ethereum, but these 5 candles approaching the prior all-time high look very similar for Bitcoin 1, 2, 3, 4, 5, and Ethereum, when you look at the weekly time frame here, or weekly candles, I should say, around 1440, right? 1, 2, 3, 4, 5. If it is able to emulate what Bitcoin did at the very least, then it would correspond to coming up to this risk band here, or this regression band here. And if it does, then the risk is going to be very high, and I want people to be very cautious. The risk is already getting up there. This level is going to be even worse. It's probably going to be getting into that new paradigm shift type mentality, and if it's not the new paradigm shift, and it continues higher to 5K, then I think that would be the new paradigm shift. Because if you look at the risk levels for, say, Ethereum, I don't think it really is capable of making it to the 0.9 to 1 risk band again. I'll set stop limits so that if it does go to those levels and I don't get stopped out on a wick, then I'll be able to take profits in the 0.9 to 1 risk band, but I'm operating on the idea that it won't make it to the 0.9 to 1 risk band. Right now, the 0.9 to 1 risk band ranges from 36.78 up to 45.02 to 0.975 actually, 36.78 up to 4,850. However, the risk levels are dynamic. In another 4 weeks, the bottom of the 0.8 risk band could correspond to $3,000, and maybe 0.9 corresponds to $4,000. So we need to take it one step at a time, just like we did with Bitcoin. We know the local Bitcoin top was 42K at just over 0.9 risk. Okay, if Ethereum were to emulate that and say go to just over 0.8 risk and not go up to the top of what is theoretically possible, 0.8 risk right now is 2741. So in 4 weeks, 0.8 risk could be around $3,000. That's something to keep in mind. Obviously, we don't know what's going to happen yet. We still have a little ways to go, but that is something to keep in mind. By the way, again, when it comes to talking about these risk levels and the ability for these coins to navigate up them, it's going to ultimately depend on Bitcoin, as it always does, as it always will. We are still well above the 20-week moving average. Okay, and until we go back down to that, I think as long as Bitcoin does not put in a new all-time high, and as long as Bitcoin does not capitulate to the 20-week moving average, those two things, then the dominance of Bitcoin will likely continue to systematically fall. It's hard to fight momentum. It is hard to fight it. This is downward momentum. It's hard to fight it. The most likely direction remains down. As we said last week and the week before, the most likely direction is down. There will come a time where it will reverse, but until that happens, the most likely direction is down. And if it were to come down to, if you guys remember what we were showing earlier, if it were to come down to, say, 55% or 54%, where would that look? Where would that be? 55% would be right here. So if it comes down to this level, that might be that would certainly be an area to start looking around and seeing, what's going on here, because that could be a turnaround point for the Bitcoin dominance, and that turnaround point might come in the form of another Bitcoin price discovery above 42K, or it could come in the event of a Bitcoin correction to the 20-week moving average. Remember, if you look at, say, the time between when we left the 20-week moving average and when we tested it, it was 182 days, 189 days, somewhere in that ballpark. If you look at the same level and go out approximately the same distance and go up about 155% or so, it could correspond to testing the 20-week at $26,000 in April. So if Bitcoin were to test the 20-week moving average in April, and we ultimately see this come back down, then the dominance in that scenario, that could look like the dominance coming down to this level and then bouncing back up. But the dominance might be going up, not because the price of Bitcoin's going up, but because the price of Bitcoin's going down, and altcoins are bleeding because they got insanely overvalued in the short term. So that is a scenario I need everyone to be cognizant of. There are some similarities. Obviously, We are above our prior all-time high. Things are more bullish than they were back over in this region. But if the idea is that we cannot experience something like that, well, we've experienced it before, right? Almost the identical move before. So don't underestimate what can happen. We've seen this type of stuff before. The more bullish observation would be something like this, and to say, well, if you look at the grand scheme of a market cycle, maybe this is just a short stepping stone along the way to something much greater in the short term. So I think that neither of these things will play out. It'll probably be something in between. If I had to guess, it'll probably be something in between. But we'll ultimately want to keep an eye on this and see what transpires over the next few weeks, because we should get some more direction as to whether this is coming back down or not. Remember, in 2017, we saw something similar, right? We saw it come up to the top, it bounced down, it come back up, and then ultimately trend back down. So the question is, are we at something like this here, or is it more akin to something like this, or is it more akin to something like this, where we don't necessarily crash, maybe we just go sideways until the 20-week moving average catches up. The great thing about the risk levels is it doesn't matter what we think or care about or feel about. It just looks at the math, it looks at price, time, and volatility, tries to give you some understanding of what the hell is going on in the markets so that you can leverage that information to take advantage of these pumps. Now, I come from the perspective of, my cost basis on Ethereum is really low. We were covering Ethereum on this channel for a long time, and we were buying at $100, less than $100, $200, $300, $400. So when you're talking about, a theoretical $3,000 or $4,000 Ethereum, I'm going to have my stop losses set like crazy. My stop limits are going to be just lined up and maybe even stacked if they don't get wicked out. So if that happens at $3,000 or $4,000, it's going to be a great feeling, because I'm going to have the stop set. Be like, you know what? If it comes down and wicks it out, I just made a lot of money, right? That's the idea, and that's ultimately what we're here for. And whenever the correction does come, which could still be a month or two away for all we know, or tomorrow, whenever it does come, the idea is, well, hey, we took our profits, we'll reinvest those. We didn't take profits on everything because we always want to leave potential room for the upside if we don't go up to the top of the risk band. But we took our profits, and now we live to fight another day. So we filled in the Bitcoin stops here. If they're green, it means that I took profits and then converted it into other crypto. So in this situation, it was mainly converted to Ethereum, Link, ADA, and DOT. Obviously, those have done phenomenally well, so I'm very happy I converted my Bitcoin. I've gotten some comments to saying, well, are you sad that you converted your Bitcoin down here when it went up all the way to these risk bands up here? No. Why? All of these went to Ethereum, Link, ADA, and DOT, which have performed phenomenally well since I sold my Bitcoin. If they're yellow, it means it went to stablecoins. Right now, I'm not in the process of accumulating more crypto. I'm accumulating USD. I'm buying USD, buying stablecoins. A lot of it is stablecoins, and I'm earning interest on the stablecoins, waiting for whenever there is a pullback. But so far, I still have a lot of my crypto. You can see I've still sold relatively small amounts. The only active stops I have open right now, 1/20th of my Ethereum position at 0.625, which corresponds to $14.98. 1/30th of my position of Link at 0.625, which corresponds to $23.37. And then the other stop I have right now is on ADA, 1/30th of my position, my prior position at 0.525, which corresponds to 43.6 cents. Okay, so those are the stops that I have. I'm hoping that they don't get wicked out, which is why I've given them a little bit more wiggle room. You can see the current risk on Ethereum is 0.659. It would have to come down to 0.625 for this to get stopped out. If it doesn't get stopped out, then I'll start adding more. If the risk continues to go up, I'll add more stops. And eventually I might start stacking them, right? I mean, like if we go to, say, 0.75 risk or 0.7 risk, and this isn't sold, I'm not necessarily going to leave it there, right? I want to move it up. I want to take more profits and not let it go all the way back down to those levels before I take profits. So then I might start stacking them eventually, which I did over here. You can see I stacked it. Here, I tried to sell Ethereum at 0.5, 0.525, and 0.55. I gave myself enough wiggle room. Those were never hit. This one was, and then I added these three to this one and also included the 0.6 risk band sell at that level, which was 1/8. So I'm pretty happy with how things are going. In terms of the risk metric for the good luck stuff, right? We have several that just say good luck. I would say use the total crypto market cap risk to gauge it. What I'm doing right now, I still have all of my DOT. I still have all of these coins: Celsius, Uni, Compound, Avalanche. As I said, DOT. I have all of them. I have not sold any of them. Part of the reason is because I don't really have a risk metric for them. It's hard to navigate what really is going on. But short-term capital gains is not something I'm super fond of. And a lot of these, I have significant positions on short-term capital gains. And I'd like to avoid that if possible. However, if we fast forward a couple weeks and we're looking at the total market cap risk at like 0.9, 0.95, then I'm going to be taking profits on them. I'm going to bite the bullet and pay the short-term capital gains because sometimes it's a good problem to have. My cost basis on DOT, as you guys know, is 450 or so. It's around 450. And it's already up about 5x. If we're looking at this in 2 weeks or 3 weeks and we're looking at like a $45, $50 DOT and the risk on the entire market cap is 0.9 or something, 0.95, then it's going to be hard for me not to take profits at that point. And if it goes up a lot higher than that, then I'll certainly be taking profits. Remember, it's not always about timing the top exactly. We can't time the top. We can't time the bottom. The purpose is to make money, and we're using cryptocurrency as the vehicle to make money. If you come into the market and at a low risk levels, and then you're able to sell at higher risk levels, and then it goes a little bit higher than what you sold, who cares, right? I mean, the purpose is to make money and to protect that money, let things calm down for a while, and then to reallocate that money in a smart way. Buying Ethereum at $100 and watching it go to $200 nets you the same as buying it at $1,600 and watching it go to $3,200. But the risk on watching it go from 16 to 32 is a lot higher than it was from going it from 100 to 200. Okay, so it's not about the absolute return. It's about the risk-adjusted return, and the risk right now on the entire asset class is getting high. You can see I have my stops set here on these 3 coins. If you want to follow along, just go to the stop limits tab on the risk dashboard. You'll see what I'm doing. I'm hoping, as I said a few weeks ago, we filled this in for Bitcoin. I'm hoping we can start filling more of them in for a lot of these altcoins. Okay? Now, I think what would be somewhat interesting and would completely change the game here in the short term, as I mentioned for altcoins, would be if Bitcoin goes above 42K and goes back into price discovery mode. If I'm looking at this, because I still have about 60%, just under 60% of my Bitcoin, because a lot of it was converted to Ethereum and DOT and ADA and Link. And by the way, my Bitcoin percentage is starting to get uncomfortably low because of how the rest of the market is skyrocketing in value. So this is what ultimately is also helpful in terms of trying to get myself to sell some, is because I can see my Bitcoin percentage is starting to plummet. But if you look at the regression bands here, I don't know if we're going to make it to the peak regression band in the short term. This is only fit, as I've said before, to 3 points. So I would say give this one some flexibility. It's not like the fair value regression band right down here where we relied on it heavily for finding the fair value to accumulate. This one at the top is only fit to 3 data points. That one, and that one. So give it some flexibility. It's fit to the equation y equals 10 a times ln of x minus b, where x is the number of days. So this value now ranges from 56,788 at the bottom to 83,693. So the bottom is at 56,788, which also corresponds now. So if you go to the 1 risk on Bitcoin, it's now 58.5K. So and we know this is adjusting every single week. So because this has now had time to catch up, if the price of Bitcoin were to go to this regression band up here in the short term, there's a good chance that we'd be flashing a level of 1 on the Bitcoin USD risk. So keep an eye out on that. One of the things I'm noticing while I'm doing the stream, or not even a stream, is this video, is that ADA is continuing to soar. So you can see that it's now at 53.7 cents Let's go look at the risk dashboard. It takes it a little while to catch up. It updates every few minutes, but 53.7 would correspond to, we're starting to move up there. We're probably around 0.57 risk or so, right? And right now we're at 0.568. We're probably closer to 0.571, somewhere in that ballpark. So this is one. It's my primary hedge against Ethereum. I also have DOT. DOT's been doing really well too. These are ones that, as they go up in value, we want to systematically take advantage of that. You want to keep an eye on the ADA Ether valuation, because the ADA Ether valuation historically has peaked at this level. I don't know if it's going to make it there in the short term, but if it does, that would be something to strongly consider in terms of the future ADA value against Ether. It has gone above it before, so we're not going to say it can't, but getting to that level would certainly be a fairly big milestone. Link USD is looking really good. Remember, Link USD kind of behaves differently compared to a lot of the rest of the market. So it's possible that Link USD puts in a peak this summer, right? I mean, it behaves a lot differently than the rest of the market. It's one of the reasons why we hold it, is because it improves your risk-adjusted returns, because negative volatility days for Bitcoin can a lot of times be positive for Link, but also the reverse holds true as well, as we experienced in December. Keep an eye on DXY. DXY will ultimately help guide us in the direction that Bitcoin is likely headed. If we trend up, then it's not good for Bitcoin. If we trend down, then it is good for Bitcoin, most likely. One thing to note is, if you look at the bull market support band, which we just have for Bitcoin, but if you put it, the 20-week SMA and the 21-week EMA, DXY got rejected by this in November. So if we get rejected by it again at this level, then that would be an indication that Bitcoin might go back into price discovery mode and blow our minds away in terms of what it's capable of in the short term. Hopefully this recap video is useful, and hopefully this gets you caught up on the markets, how we use these types of market conditions to systematically make money. I treat it like a secondary income stream, and I'll take the profits. If they keep going up higher, I'll continue to take the profits. Then when it crashes, whenever it crashes, we have all that extra money to then come back into the market, and then you just rinse and repeat the cycle as many times as it will let you. I think that'll wrap it up. If you guys can hear my kids in the background, I'm sorry about that, but hopefully this video has been informative for everyone. Hopefully it catches people up, especially people who are new, and we can take it from there. Thank you guys for tuning in. I appreciate it. Let me know if you have any questions in the comments, and I'll see you next time. Bye.